obviously for the benefit of those that are not here. So let's look at the dollar index. So today, let's just jump straight onto the charts. I'm sure there are pairs that you'd like us to go over. Right, I was saying if you have any questions, type them, or a pair that you'd like us to go over. Dollar index, we were anticipating this the other week. Then the market just continues pushing to the downside. And you know, my area of interest for a long time, it has been this one. Look at that aggressive push. Besides that, we have a gap here. So for me, it is a very clean area of demand. Just a second. Right, so that's the zone. Too far from that area. So until the dollar index gets to either 110 or 103,500, I am going to sit on my hands until then, especially on dollar pairs. Well, I don't trade the dollar index. Kutala just asked. Um, we always analyze the dollar index. We don't trade it. For me, it is just an indicator for the strength and the weakness of the dollar. It being the leading indicator, I would rather use it as my signal and then I trade something that follows it. For instance, I also trade the Russell 2000. It's a US stock which moves similar to the dollar index. So it's much better to, because if you're gonna trade the dollar index without maybe using correlations from treasury yield bonds and maybe gold to see where it can potentially go, there are more chances of being wrong. But when you have something that tells you that now it's time to buy, but you do not buy the actual thing, you can move to buy its cousin, so to speak. For instance, gold and silver. You see gold turning first, and then you go trade silver. It just makes life easy. It's a discretionary thing. You can trade it. Um, we still trade it the same way. Nothing would have changed there. You're welcome, Kutala. All right, so like I said, I'm not going to make any decisions. Let me see my gold here. Gold just continued pushing to the upside and our points of interest. Why is this one still here? Remember, we had removed this one because of it being located right at fair value price. So triple tops there. People who trade those patterns are looking for sales at that area, but we're looking for the market to be out of balance, which is this here, and this is balance. So lots of waiting to be done on these markets. What do I have that's as close to working out? It's something that we've been looking at together for quite a while. I don't advise people when to take trades, or I'm not a signal provider. But this is something that is on my watch list as well. I'm not gonna go through the normal way of analyzing this one because it's analysis from last week, but it's still valid. Why? Because we had um let me expand the chart. There we go. So we had imbalance followed by fair value, big push. This is also fair value here. We had fair value price over here, market consolidating, and we are anticipating the market to come down to 0.82500, and we will buy at this area all the way to 0.85. That is actually the main target. Very nice risk reward ratio here. An easy 1:8. There's still a potential that the market can take you out on a stop loss. Hence, you should always calculate your risk, predefine your risk prior to executing the trade. What else do I have? Let's look at pound dollar. Yeah, pound dollar cable. So there's still this area that I'm really interested to sell from, but pound against the dollar has not reached that area yet. So as you can see, with any pair that has a dollar, there is a lot of waiting to be done. So we're right at fair value now. Kotala wants us to look at ADJPY. I have a pending order on that. By the way, ladies and gentlemen, I'm going to announce it to you, but you're going to see it on YouTube. I am doing a challenge, raising capital. I'm raising 1 million US dollars in prop firms funding. So the Aussie yen is one of the pairs that I have on my watch list. Let's look at it. Oh yeah, quite a tricky one. This one, quite a tricky one. Let's analyze it the right way to avoid confusion. All right, so we're bullish on a weekly, bearish on what's this time frame? Bearish on a weekly, bearish on a daily time frame. So ideally, we need to be looking for buying opportunities. However, I am also looking at a selling opportunity somewhere, somehow. Um, this is an order that has been on the market for me since last week. So I'm just waiting. So with this one, what I saw was this fair value here, and that gap there, that's a potential area to sell from. But according to our analysis, we need to be looking for buying opportunities. So there's this area, but it looks like fair value. So let's go down with the time frames to see if we can find something lower than that, because as you can see, fair value, we tend to avoid those levels. All right, so we have something here on a 1 hour time frame, which is this candlestick, and look at that imbalance, fair value above it. So we can also have something like this. Right, yeah. So Aussie yen, that's what we have. Kutala. I hope it looks similar to yours to avoid confusion. So these are the long-term areas. However, this looks like a nice supply area, and it's fresh. And it's fresh, this area. Look further left, there is an area of fair value around that price. So we cannot really trust it 100%, but I feel like it's a great location. If you want to sell, like I have my pending sell order here, I've been debating it all week whether I should remove it. But when I look at the market, everything it ticks all the boxes because I use a rule-based system for entries. If I don't see, so I use a rule-based system for my entries. If I don't see what I'm always looking for, then I won't commit to that trade setup. I think I also saw something on natural gas. Oh, I'm not sure if you guys trade this. See, for me, I can trade everything because I think you can do the same thing as well. Because with supply and demand, if it's really supply and demand, it's supposed to work across all markets. If it's really supply and demand, it's supposed to work across all markets. So let's look at natural gas. We're bullish on the monthly time frame, bullish on a weekly, strong, strong, strong bulls, and potential area to turn from this one right here, which is exactly $6, $7, somewhere there. But remember, we're looking for buying opportunities, so let's not lose focus. Step down to a daily time frame should give us a daily bullish bias as well. So and then we then look lower for potential opportunities. For me, what's clear is this here imbalance or a gap. So the market has to come back to fill this up. It has to come and fill these orders that are here. See, on the upside, there's lots of room to the upside. So this is one of the trades that if you'd execute it the right way, see why I don't advise people to scale into trades or buy Nasdaq 10 times at 0.01 on the same price. Don't advise them to do this because yes, I know you're looking to make a lot of money now, but what if you can get setups like this? 1:18. Imagine you're risking, let's imagine you're now a funded trader, you're trading 100,000 US dollars. That's where I'm trying to get you guys this year, by the way. Say you're funded 100,000 US dollars and you catch this trade and you were risking only 2% of your account. So 36% return is possible here. And that will be 36,000 US dollars. That is over 500,000 in rents. You're good. So that's how we trade. Less stress, we take a less risk and aim for a high reward based on supply and demand. We don't just wish to make a 1:18 out of this trade. We have defined entry and exit points. We have new members. Welcome, welcome, guys. Welcome, welcome. It's always a pleasure to have you here. What else can we look at? This is just me going through what's on my watch list. Buyers and sellers were happy here, right? Lots of consolidations. So let's go to a monthly time frame. So this is how we find directions. First things first, you know very well that you're going to be either a buyer or a seller in this marketplace. Very well. But how do you choose? How do you pick a side? First things first, you must find a bias or the direction of the market. So how we do it is we use the current candlestick, and current month is bullish. Current month is bullish. Let's look at the current week. Current week is bullish as well. So how do we know if the current time frame is bullish? So we do this. I hope you can see this yellow line. It marks the opening price of this candlestick. So you look at current market price right now on the Kiwi versus the Swiss franc. We are trading at 0.51. 650 and we opened at 0.51365. So clearly we're trading above the opening price. Hence, we say we're bullish. I hope that makes sense. Same thing when we get to the daily time frame. Daily time frame is bullish as well. So when we go through these three higher time frames, the most ideal situation is to have all three time frames telling you the same thing as it is right now.
Okay,
The daily, weekly, and monthly time frame are saying we're bullish.
okay.
But what if we have
Taibamba,
one of them
Taibamba.
disagree,
So,
follow the direction
masicale
of the
sithi
highest time
kule
frame?
once off ne sithi
Yes, the recording will be shared. The recording will be shared.
uh, okay, sharp. Kwi
All
once
right,
off
Steppy, no worries.
sesi
No worries, guys. This will be shared. All right. So back to the bias, finding the direction of the market or the bias. Where are the buyers going? Where are the sellers going? Who's in control between these two groups? Yeah. All right. Let me try to mute. All right. I hope it's okay now. So now that we've found the direction of the current market, right? The current market, because someone will be looking at this from a 5-year chart, they might see something different. Okay. We are bullish. So this means we need to be looking for buying opportunities. Doesn't mean we won't see some nice looking selling opportunities. I don't like to compare trading to relationships. But once you understand what you want as a person, you'll start seeing it and you'll avoid what's not for you. All right. So, okay, back to the daily time frame. So we're supposed to be looking for a buying opportunity. So from here, you scale down to lower time frames. To me, my lower time frames are 2 hours, between 2 hours and 6 hours. And then the others, 6 hours to 12 hours mid time frames. So what are we looking for? We're looking for an area of imbalance. So an aggressive push up in this case because we're looking for buying opportunities. Okay. So I haven't seen things clear. So now we have that drop, base, rally. So the idea here is that there are buyers that were left in this area. Okay. There are buyers that wanted to buy in this area, but there were no sellers. So what did price do? Price went up to look for the sellers. Why? Because higher prices favors sellers. I'm going to repeat this. So we have a structure here or a demand level, a drop, base, rally, right? Why did price move up? The idea based on supply and demand. So I learned from someone who was working in the Chicago Mercantile Exchange back in the 90s, the guy who developed this strategy. He's not the founder of supply and demand, of course, but by looking at the orders that were in front of him, he understood where the market would normally turn. And once again, by looking at the orders, the pile of orders, because back in the day, the clerks would have piles of orders. Left-hand side, they're selling orders. Right-hand side, they buy orders. Whenever the pile on the right, which were buy orders, and the pile on the left, which were sell orders, were equal, price tend to stall or it tends to play around the same price. That is fair value. Everyone is happy. Every buyer can meet a seller. But as soon as one pile is higher or lower than the other, that is when market started, or those are the areas or the prices where market would normally turn. So logic to understand this from a basic point of view. Why is price going up? at this point. It's because there are buyers that wanted to buy, but there were no sellers. So price is going to go up to find those sellers. Once the sellers are found, price will come back down to mitigate or to satisfy those excess buy orders. And if there's still more buy orders in this area, meaning buyers are are buying aggressive here, price is still going to go further up to look more sellers. And if its price doesn't find sellers, it's still going to climb higher, higher and higher because obviously the demand or the buyers are more than the sellers. So what my aim when I started this, it was this sessions with you guys. It was still is, by the way, to help you guys see this thing differently and in a very, very simple way. It is not that complicated, trust me. So now you can plan for your trade. No need to panic, even if you've got a job, like most of you guys, which is a good thing because now you won't force things in the market. You have something to take care of your bills, right? So now you can plan. You can put your buy limit here, stop loss there, target up there. And what's the risk? So the risk reward ratio here is a 1:5. So you can decide from your account. Let's say maybe you have a 10,000 Rand account. You can go, oh, okay. I'm willing to risk 500 Rands on this trade. What is the potential reward? If everything works out well, I might get 2,500. That is enough. You didn't sweat for it. Okay. Hope that makes sense, ladies and gentlemen. Right. Pindi says, does that mean gold current has more selling orders? Let me see. Let's look at gold. Are you guys aware of other commodities? I also trade platinum, palladium as well. So with gold currently, to answer Pindi, I'd say there are more buyers because as you can see, price just keeps continuing to the upside. If even if we can check on a monthly, it's bullish. You go to a weekly, it's the same thing, bullish. Remember, we're looking at the current candlestick. We go to a daily time frame, it is still bullish. So in this case, it means there are more buyers than sellers. So price by going up, in general, we can say it's still trying to find sellers that will now push price down. It's just a game of these two. Right. So it's either a buyer or a seller. So with gold, stepping down to lower time frames for preferably several areas you could look at here uh for potential buys. Look at this one. This is fair value. Well, with experience, I can see it now, but if you just go to or expand or zoom into the chart, going to a lower time frame, it's clear. It's right in front of you. So I think Kutala would appreciate this one because she must have done um, must be doing some X-rays in her job. So the idea of top-down analysis, imagine yourself as a knee surgeon, or yeah, as imagine yourself as a knee surgeon. What you're trying to do, well, after establishing a bias, this athlete came into your medical practice because he got injured during the Super Bowl game, maybe. So you've already established a bias. This um, athlete tore an ACL, was one of the worst injuries in sports. And then you want to take them to MRI or do X-ray. If you're old school like me, we used to do a lot of X-rays when we're doing medical checkups. You go to an X-ray, um, but then you're not going to look at one image. You're going to take um, different angles, pictures of at different angles of the same knee, because you want to get to that aha moment to say, oh, okay, if we can approach the surgery from this angle, it will cause more damage. And maybe even when the athlete is going through recovery, they can recover faster. So by going through different time frames, what we're trying to do is to see the best area, possible price to enter the market from. It doesn't mean there's a time frame that is superior than the other. Otherwise, price is fractal. Normally, what you see on a 1 minute is probably the same. You can also see the same movement on a monthly time frame. I hope I'm making sense. So with gold, um, you can look to buy in the near term here.
Hello, this is Paul.
Once again, planning for a trade is very important. So you're planning for it. My entry is going to be here, stop loss below. My targets are probably at this high, or if you're Maxwell, you're aiming for minimum 1:5, and that's good enough. And you calculate your risk. Doesn't have to be a complicated thing, right? You calculate your risk, and there it is. Trader's plan. All right. Um, Tepi Osi has just asked, uh, fair value gap. We do not talk in those terms. But we do have something that has fair value in it. It's fair value price. The concept of fair value gap, I never looked at it that much. I never went into details um with ICT. I've just been a complete supply and demand trader. However, what I can talk to you about is imbalance, right? Let me see. Either way, we have 4 minutes left before the end of the session. Let me see where I can get a nice imbalance. So, let me do this. So the market really was meant to move like this. Oh, let's see if I can change that. Fill color here as well. Right. Where our opportunities lie is when the market starts doing things like this. So naturally, the market is supposed to move like this. Just give me time, mate. It will make sense with in a second. It will make sense just now. So these are your candlestick. So this represents a balanced market. Right. So what is a fair value gap? So for this market to be balanced, I'm going to use this. For this market to be balanced, sorry. Yeah, hope I'll finish this on time. So for these markets to be balanced, this week is supposed to go cover the close or the wick of this candlestick. It doesn't have a wick. So once the wicks are like this and we have a gap, I don't know much about fair value gap, but I'll tell you one thing. The concept is the same. Concept is the same, that the market doesn't allow empty spaces. It has to fill in that. So with that, you normally expect the market to come into that area or a supply above and then continue the move down, because it has to continue the movement of the preceding trend.